Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So, this is day two that I think a lot of frustration has been set in on the floor. Sometimes it's easier to trade, sometimes the setup is better, sometimes it gets tricky. Now, when the rally ignited, or the second round of the rally ignited December 20th, it was really easy. Well, not easy, but to have multiple positions for a core long, to ride it out, made sense. You know how my mantra is, I like to get the meat and potatoes of a move, and then the juice gets slippery, when you're trying to be long for the end of it, and then it also gets slippery if you try and short the end of it. And it does feel like at this point it's very tricky. The setup's not great, the edge is not really there, because anytime you get a morning pullback like we saw, every trader in their mind is saying, is that it? Is this the real retracement? Are we going to retrace 25% of the move, 38.2% of the move? Are we going to pull in 1 to 3% or 2 to 5%, which has been a normal occurrence, okay? And normally happens in even healthy bull runs. So when you get the last 2 days, where even like today you get a pullback, I know for me I mismanaged it. I've been holding multiple positions, and the thesis has been you want to have hedges on, so when you have a pullback, you can then cover your shorts to add cash flow, and then add to winning stocks that are showing relative strength, and stay the course, create alpha, and enjoy the ride. But as you get higher into this move, the last 2 days, instead of managing it that way, which we were doing, for a while. So like if you put this into different parameters, like the first, I would say 20 sessions of the rally, I was mostly long only. And then just saying the last 7 to 10 days, I've been, portfolio approach with hedges, and I've been trying to do that where we get down opens, add, cover some shorts, add to longs, play breakouts, high five, continue making money. And then the last 2 days, instead of staying that course, every time we've had the pull-in, instead of covering, I've been adding the shorts and just kind of limiting some of the long exposure, thinking I don't want to get caught. I want to be the guy, who makes money on the day that we put in the top, versus, losing a little bit and then switching gears. So I've lost a little bit both days in the last 2 days, instead of, continuing to make like we've done during the course of this move. So if you look here at the spiders or the S&P, it's definitely very difficult to stay the course. This was that outside reversal. This was your day one of this whole rally. Like this, not even talking about 33 sessions from the December 20th. I'm talking this was your major reversal, of the overall thesis going back in October. And then you had multiple strategies there, where here's where we held. Then you broke this downtrend, had a big move, to then get it retested, to come back up, versus a high, to come in to retest. Where each time, remember this retracement was 61.8, 61.2% fib number. So same one here, and now, since this breaking of this descending channel, it's, during this part of the rally, it was, pretty easy to be long only. We remember we took out this area. This was, the October high, and so that was when you thought we'd get momentum, and we did. And I think, then this is when we tested this little floor. Remember, we went sideways a little bit longer. Couldn't come below that area. And I would say this is probably when, I started to put a little bit more hedges on. So here is like, get long, rally, get some energy back. This is when IBD put us back in a confirmed uptrend. Stay the course, keep going. Here is your momentum. This was your, clear the October highs. Congratulations. And then right around here, 1320, 1330, it's okay to get a little hesitant. It's okay to get a little skeptical. This is when we put the hedges on, and so now we're muting some gains, looking for cash flow. And at this point, these last 2 days were days that I mismanaged. And instead of buying, seeing that we weren't even able to come into 50% or below the top third of this last wide range bar, the complexion and composure hasn't changed. You take more of a macro look here, and you see where we are. Obviously, you look where we came from to where we are. We're coming, into and eating through some of this big time resistance. So here's your next point of reference, 1357, and then here was the day we killed Osama bin Laden, 1370, and we closed today, around 1349. So we're only 20 handles away from testing this area. This probably won't be, a big point here. And we still don't even have Greece confirmed. If Greece gets confirmed, perhaps that would be the excitement that's needed in order to put us at a short-term top. But who really wants a short-term top? If you really think about it, we make our best money when we rotate through sectors. You see stocks have a nice move, flag. We continuation patterns, bull flags, wedges, and that's the way we make money. You go with one group to the next group to the next group, and you keep riding it out. So just don't get the short on the brain. Don't try and overthink it. I probably had about 15 IMs at around 11:30 when we pulled in, saying I'm out of all my longs. That's it. I'm calling the top because people want to feel good about themselves, saying they called the top or whatever they want to feel or make a name for themselves. And then obviously we continue, and then it's hard to get back in them. So whatever, I'm rambling a little bit. As far as stock action, Apple, I sold my long yesterday. Today I tried a cute short, lost money doing it. It was worth the try. If you look here, I talked about it. Like everyone was worried about it not having a lot of volume. Right around here, we're like, what? Now it's time to go parabolic, and that's what it's starting to do. It's starting to stretch from all the moving averages. And if you're long it for your macro account, congrats. As a trade, we talked about entering on these 2 days, for a swing. And then so for me to sell here, not a bad trade from about 450 to almost 470. So I missed this, and I actually lost a little money shorting it today. If you look at the 5-minute chart, you'll see what I did here. Okay, it made sense, and it made sense to cover it. Here was that upper. I tried it off the bat, really small in the open, but this is really where it was worth a shot. Here was your flag type pattern, little wide range bar. This is when I got short. Okay, came back in. I think I shorted more on this lower high. Okay, on this retest right here that kind of failed, and I did cover some into this, and then I said, okay, I'm going to leave with a trailing stop on half right here, I think it was, because I didn't want to lose it all at the highs of the day, and then half here. So all in all, I lost money, and it wasn't a debacle. It just I donated money back to the Apple machine. But if you tried it here, okay, for your first entry around 473 and change, versus the high, you had $1 stop. So it was worth the risk. And if you miss that and you saw it come back, retest, and turn lower here, this could have been your entry. And then you put a stop. If this was 473, you put your stop at 474 and a quarter. That's $1 and a quarter risk. And some scalpers would have just taken this trade here. Okay, I actually said I want to look to see maybe it does a real reversal, and obviously that wasn't the case as Apple continued. But I also covered here, so I saved myself about 2 points and 2 points of pain. And the wrong way to do it was to get short here, get short here, get short here, get short here, go out short, and say this is crap. This stock's gone too much. It's I'm going to win. No, that's not the way you make money. That's how you go out of business. The way you make money is maybe you short a little bit here, short a little bit on this retest, cover a little bit, and then have a plan that if you're wrong, you get stopped out, and that's the trade. So anyway, as far as that type of trade, it's a cute trade that I call it because you're going against the trend, trying to pick out a reversal. We've done this many times. So we did this, if you recall, in the last month in Shield, worked out very well. We did it in B Vision, worked out very well. We did it in Netflix twice. If you look at Netflix, that was our trade today, or yesterday. Remember we did that little video, and it worked out. But it actually confirmed it. Apple didn't confirm it today. Apple never went back below the previous day's high. So yesterday, when Netflix stretched, came back below this 130.60. And closed below it, that was your confirmation that you had a little bit of a momentum change. So that's why I went out short. And you could have shorted a little bit more today when it retested this 126.81. And it closed around 124. So a nice 2-day trade. Same type of pattern happened about a week ago where it pushed through, didn't even close red like it did yesterday, and it gave you a nice trade. So now the question is, will it break this area? So we'll see that tomorrow. It depends on how it opens. Maybe we'll short it through the low of today for some continuation. So we'll see. But this trade worked, but you didn't even really have to catch this topping tail. You could have made money today by looking at it and then acting today on it. So anyway, that's that. As far as Google, I tried to push through 510, 610. Didn't really have enough energy to do so, but nice little flag type pattern. If you bought in front of the 200-day to average your position down after earnings, congratulations. If you traded it into the gap, you're making some nice money. Next area will be if you can get above 610 for some continuation. So, maybe another day tomorrow. Tomorrow will be on my radar. I'll actually trade this if it gets through it, tomorrow, depending on the open. As far as Amazon, not much really to talk about. Still in this little mini range here. Maybe tomorrow there'll be a trade if it wants to try and get above it, but it's relatively weaker. Microsoft, very impressive. Again, this was the mega cap surprise. We went over on Bloomberg. And for those of you that continue to hold it, congratulations. You're at new highs here today. As far as trading it, this is when it broke its downtrend. And then this is when it flagged. And you could have had an additional trade for momentum, and it's looking good. I talked this morning about IBM, Caterpillar, Qualcomm, 3 stocks that potentially could break out into highs. They didn't. They're still on my radar. Maybe they needed another day. You look at IBM, still hanging out above here, still in this upper area. So if it were to finally get a little momentum above this 194, 195, it'll negate this somewhat of a double top, and we'll get that nice trade here. So don't lose sight of IBM. Caterpillar also, definitely nice tight bull flag here. Don't lose sight of this. Above this, like 114.65, it could continue. Stock looks good. If you had a Q trade when it gapped up into earnings, consolidated nicely, and now looks like it's ready to go. Qualcomm didn't quite, get going today, but it still tested the lower end of the range, closed okay. I'm still involved there. Maybe we get that trade above the 61.95. I think this is just like a macro hold that you stay with. You don't have to be so big so it, doesn't shake you around. And then today the banks were strong. Bank of America, it was our sector spotlight, went above 8. JP Morgan was strong. Citigroup actually triggered and was one of the better ones. Take a look here. It cleared this little 3-day range, and now it's trying to clear this October high. Citigroup's been acting well. I haven't been focusing on it. Some of the other traders have been having success with it. JP Morgan has been the one that I've been holding, and it looks like it's going to try and take out this big resistance, and it could be as soon as tomorrow. If that's the case, market's going to trade higher. So here you go. Let's see what happens there. It could get to about 40. Goldman Sachs still on the radar, still flagging here. It's a little weaker than the other banks today, but Goldman likes to mess with everybody. So the longer it stays above this like 15, 16 area, above this 17, and it clears this, you're going to get a nice squeeze probably on that day to as high as 124-ish. So that'll be something to keep on the radar, and this also will give us some clues on whether or not we go to 1370 in the S&P. And then, switching gears, remember Friday at 2:30, some big volume came into dries in the shippers. I'm like, ooh. We haven't seen that in a while. Let's just get involved in that for a swing trade. Look what dries, for 3 days has done. This was, when it woke up right here. Remember that? Let me put some volume in so you could see how it actually was combined with volume. Big volume on the day it woke up. So that made a lot of sense here. And what now, this was, I guess, one level here. This was the other level, but this happened at 2:30, so I went long it. And then you remember a few days ago we made some money there. Now it looks like it's going to get above 3. Could even get to as high as 350. If you look at some of the other ones, GNK, not as strong, but hanging around. What's EXM doing? It's a small little stock, but EXM had a big move, consolidated, went above it. This can get to maybe 242. So there's things to do in that area. The semis, you remember yesterday I was excited. I don't know why I didn't trade it, but I'm like, wow, look at the pattern on Intel. Nice tight pattern. Looks like it can go higher. Intel, look what it did. It's trying to, after a huge consolidation, after holding above this recent breakout, looks like it wants to go again. This actually is rewarding macro investors, and it seems as if it could be a decent trade for some of us that are looking for momentum. So if you look at this level here, above this 27, it could be good for a momentum trade, and we're talking Intel here. Broadcom, it's been acting great since earnings. Good job to Jill. She was all over this one, and it continues. It's coming into pretty big resistance here. Tailed a little bit today, but all in all, it's acting much better. As far as CRM, I talked about it a few days ago. It actually triggered above another level today. I know it's a little slippery, but as far as the stock's concerned, remember we talked about breaking 120, looks good. Now it's flagging again. If this were to get above, what's this, 124.79, should continue to this moving average. BMW is choppy, but I'm still holding it, and it's, it's fine. This is that next level there. This was when we started talking about it in the flag. And then the OAHs hit the high end of resistance today, and really didn't back off much. It's still still hanging around in this inverted head and shoulders. Here was your tier 1, tier 2. Now it's hovering by this neckline of this major, major resistance. So if this just goes, you're going to see the market higher. And typically, sometimes it likes to back off and create a little bit of a handle here before trying to get through a big level like that. But the market hasn't been backing off, so we'll see. And today, Caesars, okay, great IPO. I haven't done it this year because IPOs haven't really been the focus, but we have this strategy, for the art of the first day of an IPO. And I probably should do my own little video on it, which I might actually today if I have time, on how when a new issue opens up, you let it trade for 15 minutes to 30 minutes, create a range. Just say like today, Caesars opened up at 14, went all the way down to 11.5, consolidated, went sideways. When it went above 14, that's your momentum trade for a new issue. So if you look here on Caesar, you'll see you go to your 3-minute chart, and it did exactly that. They halted it here. Really didn't they really didn't trade there. It opened up here, came in, okay, and then really once it traded, you could do it this way too, where depends on how tight you trade these things. But this was the pull-in. Once it turned and you saw this nice wide range bar, you could have either bought there or said, okay, now I'm going to really watch it close. Here is where a lot of guys started buying above 13. Had a big push. Came back in, retested it, and then got really frisky. Above 14 and went as high as almost 17. So right there, this is a great trading new issue. It did it for about 2 hours, and then it just consolidated, went sideways, and now we'll give it a few days. If it gets above today's high tomorrow, maybe there's a continuation trade. But basically, it opened up around 14, pulled in. Here's where it woke up. This is where your entry number 1 was. A little tough trade right here, but then once it really got above, that area, you had a clean move to almost 17. You could have made a lot of money there, and then it just started going sideways in the end of the day. But this is what I hope, Facebook might do, where wherever it opens up, has a little bit of a pull-in. It turns, you could buy some there, and then once it breaks above that opening price, you can get a decent move. And from 13 to almost 17, that's a nice percentage winner. That's a nice trade for those who do trade the new issues. Sometimes they open up, they come in, they go up here, and then they just fail, and then they don't deserve your time. But if it gets above that opening print, and consolidates for a good hour like it did, typically you get another move. So in closing, just want to say that the stock market has been acting very well, and I know that we're in a tricky spot. If you're not trusting it up here, then just do a little less. Don't give back money that you made during a more calculated time period. I talked about it with the morning call today, saying that the PE of the S&P is still trading below its 5-decade low. Not 5-year low, 5-decade. That means so you cost average the last 50 years and what the PE that the S&P was trading at, we're below it. If we were just at it, where technology is booming, companies are full of cash, we're streamlined, the world's connected, you would think that we'd be trading almost at a higher PE than the 50-year average. Obviously I know there's problems in Europe, and our unemployment's a little tough, and Washington still has its problems. But anyway, we've had these problems during every time frame. You had it, in the 70s, 80s, 90s. There's always going to be problems. There's always going to be a wall of worry to climb. But the bottom line is we're below the average of that 50-year PE average for the S&P. So if we were just at the average, not trading above it, but just at the average, S&P 1700-ish. We are now at 1350. That is a nice move to the upside. Okay, not saying it's going to happen. I'm not saying it's going to happen tomorrow. But if things keep incrementally getting better, and the data continues to be positive, and Europe continues to muddle through, we're going to get some traction, and this 14-year or 13-year base that the S&P's in might be able to be resolved to the upside, and I think it does. It's just a matter of time, whether it's 6 months, 12 months, 18 months. So stay the course. Don't fight it. Don't be that guy who's miserable every day because the stock market's going up and you can't believe it, whereas people who don't think about it, who might be putting money in their 401k, like I said, an example like my wife, who's 35, has been doing it since she's 29, she loves her statements. She puts, the same amount percentage and gets it matched every single month. She's been doing it for 5-6 years, and she Dow 12,000 down to Dow 6,600. Did it, stayed the course. Different type of investing. Just every month, same type of thing. And she has a nice year-over-year percentage, and she's happy when the stock market goes up. Because she's involved for the longer term. That's a longer term strategy, not actively managing positions, not creating cash flow, not doing things as a professional like we do. But so don't try and be the too smart where you're looking to be cute, because being cute can make you ugly, and that's the last thing you need to do. So take the last day or so in stride. I'm going to blow it off. I lost a little bit of money today. Big deal. Maybe if out of a 1 to 50 on my month, I'm down to 47. That happens. It's the cost of doing business, and it should be the same for you. But if you let it get out of hand and you turn it into a vendetta, you're going to be a miserable person, and you probably won't make it in the business, or you'll stop trying to learn how to maneuver the stock market. So just blow it off, and we'll get a better setup. Right now, I sometimes relate this to blackjack. It's like we're playing an 8 versus an 8 now. So you can make money, but it's not a great setup. You could have an 18 and the dealer could have an 18. It just doesn't make sense. And even it's not a great hand. Give that hand back. Let's play in 11 versus 6. Let's play a face card versus a 5. Let's play high percentage hands, and not the ones that you don't want to feel good about when you get dealt. And right now it's at that spot where it's a little tricky. So you don't have to push the keys. Scott Redler, T3 Live, the recap. See you tomorrow morning at the call with Jill. Have a good night.